I know. That weekend just flies right by, doesn't it? It's time to get back to work tonight. It's Monday evening. We get the end of the month right around the corner. It's March 29th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the Emini, got the Nasdaq, and got that gold on our radar for tomorrow. Boy, where do I begin? End of the month. Big news this week. Lots of ranges, got some strong breakouts, which reminds me, here's the big question I have for you guys going into tomorrow's trading session. Can we really hold these breakouts? You know, gold breaks out lower, Nasdaq breaks out higher, S&P staring down those all-time highs. So come on, are these breakouts legit? How do we trade those breakouts, and should we fade them instead? You know, gold looks pretty good for a breakout, but Nasdaq, S&P, I'm suspicious. So lots of ranges, got some breakouts today though, but tonight in the video, we're talking about should we trade them, should we fade them, and how to really capitalize on these breakouts across all of our favorite futures markets. We're going to cover all the details here tonight. We'll cover all the entries, all the exits. We're going to give you guys a great plan for Tuesday's trading session. Before we jump in and get our hands dirty tonight on these charts, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day. So make sure you subscribe. And don't forget, if you guys have any questions, drop those questions for me in the comment section below. I'd love to answer any questions you might have. And as always, I appreciate you guys tuning in and carving out some time every evening on this video. If you enjoyed this video as much as I enjoy making it for you guys, do me a big favor, help me support this channel by hitting that thumbs up button, that like button here on the video. And again, don't forget to subscribe, that way you don't miss my next video newsletter. But enough of introduction, time is ticking. It's Monday evening, Tuesday is right around the corner. We got major news, we got end of the month, we got breakouts galore. All right, so here's the question. Can we, or how should we trade these breakouts, right? Range on the gold, big breakdown. Range on, well, multiple ranges on the Nasdaq, break up. Ranges, right? Ranges on the S&P, breaking higher. Do I trade them? Do I fade them? Are we buying these breakouts? Are we selling these breakouts? You know, for example, on the S&P right now, S&P and NASDAQ have some really big overhead resistance here right now. The S&P staring down all-time highs. These ranges below us would be great to get short here on the E-minis. Only problem, though, is we're very bullish as we go into this infrastructure deal coming on Wednesday here in the U.S. So if I want to short these breakouts, I better be careful. We'll talk about the best plan as we dive into this video here tonight. And then how about that gold, right? We had like a breakout that or a range that never ended, right? Last couple of weeks, been range bound on the gold. And then, of course, rollover over the weekend. And bam, right? We get that big, strong move down, big open loop down there. Got a bunch of great levels. I'd love to short this thing. But, you know, there's a weekend gap up there, and I wouldn't be surprised if we whoop right back up into that range. We'll talk about how to sell it and buy it tonight on this video. So whether you're an E-mini trader, NASDAQ trader, we got you covered on gold as well. Before we jump in, though, and get these charts going here, talk about the specific entry setups for tomorrow, let's make sure we take a look at the schedule here for this week, because this is not your ordinary week. There are a couple big issues you should be aware of here. Not issues, but just information you guys should be aware of as we go into this week here. First of all, end of the month. What do we always think end of the month? Desperation, right? Desperation. Well, not always desperation, right? You got some traders who are desperate to pad their numbers and get their numbers in the green. You got traders who are in the green and they're trading, you know, loosey-goosey with their rules. Markets become more risk tolerant. We see more volatility. We see just more aggressive price action. You'll see stuff during the end of the month that you won't normally see other times of the month. And, you know, I always think about, you know, the end of the day, end of the week, end of the month, right? When human beings get and again, I call it desperation because as that time ticks down into the end of the month, all the big trading firms, if you're working a desk at a trading firm right now, your month end is right around the corner. The pressure is on. So a lot of extra volatility we see as we go into the end of the month. On Wednesday this week, we're supposed to hear about this $3 trillion infrastructure package out of the U.S., right? President Biden here in the U.S. alluding to it being announced later this week. They're saying it's going to be Wednesday. Now, what that means for us is tomorrow we may see a lot of kind of pre-positioning. People try to anticipate what the market will do. So that will lead to increased volatility tomorrow. So tomorrow could be a pretty busy day in these markets. And then later on in the week, of course, we go into the month of April. No April Fool's jokes, all right, this week, okay? None of that. None of those shenanigans. Keep them to yourself, all right? I'm kidding with you. But Friday. Now, Friday is an interesting day because a lot of folks don't know Friday is Good Friday. It's the Friday before Easter Sunday. Now, most of the time, holidays, the markets are not closed. But if you go to the CME group, go to their holiday calendar, you'll notice markets are closed. The markets are supposed to be fully closed on Friday. Now, they're going to be publishing that employment number on Friday, but markets are closed, right? Again, go to the CME group, check out the holiday calendar, and you'll see for yourself, right? Close. Now, there are only a couple days every year where the markets are actually closed, right? Good Friday is one of them. New Year's Day is one of them. What do you think the other one is? There's one other day of the year that the markets are fully closed. If you know the answer, make sure you drop that answer for me in the comment section below. I want to see who knows. There's only a few days the markets are actually closed. Good Friday is one of them. I'll give you a hint. New Year's, right? New Year's Day is one of them. Even the third one, drop it in the comment section below, and kudos to you. But the bottom line is Friday is a closed up session. Now, why is that a big deal? Well, because if there's no trading on Friday, and you come in with a brand new month on Thursday, you've got your feet to the fire to make your money before we go into Easter weekend. Now, Easter Sunday, we'll be back for a full week next week, but Friday markets are closed on Friday. So that really puts all the trading this week in Monday, Tuesday, Wednesday, and Thursday, right? So the pressure's on, end of the month, scarcity comes in. Should be a pretty busy week in the markets and, of course, in our trade room. Now, diving deeper here. Now you guys know kind of the big picture here this week. And we'll talk more of this as we go into the end of, as we get later in the week here this week. Looking at the big news here for tomorrow. Again, tomorrow I would anticipate, a lot of tomorrow to be dominated by people anticipating that big infrastructure plan coming on Wednesday. The major news tomorrow is that consumer confidence number at 10 o'clock Eastern time. I would imagine traders will be watching closely to see if we continue to see record-breaking consumer confidence numbers. Remember, anytime we see these extremely high numbers is oftentimes an indicator of a blow-off top, right? Anytime everybody says everything's good is usually when things aren't going to be good for very much longer, right? So traders will be watching that number closely, and I would imagine that 10 o'clock to 11 o'clock block will probably be a pretty darn good time to be at your desk trading here tomorrow morning with us in our trade room. Now, don't forget, tomorrow morning we'll be in our trade room 8 o'clock Eastern time, right? I would love to have you there, right there with me. You can find all the membership links you guys need, the description of this video. But now you guys know the plan for tomorrow, right? 10 o'clock is the big news for tomorrow. Lots of, anticipation tomorrow, ahead of that Wednesday, not stimulus bill, but they're calling it an infrastructure bill here right now. And Friday, right? Friday, markets closed. Definitely expecting increased volatility here as we go into the rest of this week. All right, let's get back to our charts here. I just want to make sure I took up a little bit of time here to go over the plan or the layout of this week because expecting a lot more volatility as we go. Now, S&P's ready, Nasdaq's ready, gold is ready. Good to see you already here as well. Hope you guys had a fantastic first weekend of spring, right? Was it the first weekend of spring? Hope you guys are enjoying the springtime weather. All right, let's get into the S&P here, starting off for us. What do we know happened here on the S&P? What's the overall on the S&P? If somebody asked me what's happening on the S&P, I would say, well, you got to go back and look at last Friday. Last Friday, we finished with that, what they're calling kind of a panic buy, right? That strong run up to finish off last Friday's session. Now, anytime we see a strong run like this in one direction, we know the odds are very good. We'll eventually get back to that area, and then from there, either go higher or come back down, right, to retest those lows. We call these open loops, right? These strong moves up. What they do is they kind of create like a magnet, right? They kind of create like a sense of urgency to go back up and retest the high. That's a really big clue because look where we are right now. We're right up around that high right now. So if somebody was to ask me, the buyers got a nice strong run on Friday, and right now they pretty much, could I say they completed their objective, right? Their objective was at some point today to go back and retest the high. And you can see they get a strong run up to take out those highs, and they just finished to do it again. So a very, very big clue on this. The buyers have completed their mission. They've completed their objective. They got that strong run higher. They retested the high there. Strong run higher, retested the high there. Right now, the buyers should have no urgency left in this market. Very important clue. Now, second clue is this range. If you guys are with us this morning in the trade room, right, market spent most of its time inside of that trading range. Now, what are ranges? Ranges are magnets, right? Ranges are where basically buyers and sellers agree on price value, right? So if you look at a kind of a market profile chart or a volume spread chart, you would see a lot of volume here, a little bit of volume there, right? And there's a big magnet that will drag that market back down into that trading range. If we do end up going back into that trading range, I can use the amount above the range into the amount below the range to find some good targets, which, as you can see, puts us in another trading range, right, from late last week. That was last Friday's trading range, right? That will act as a magnet. And then, of course, you can see up top here, we are right at those all-time highs right now. So we're sitting in a pretty difficult spot to be a buyer. Let's put it that way. We can definitely tell we're bullish. I don't think you need me to tell you that right now. We're definitely bullish. Not a bear market by any means, but with the buyers completing their objective once, with the buyers completing their objective twice, with this overhead, just lots of resistance up overhead here. It's very difficult to want to be a buyer at this point in the game. With that range acting as a magnet, I'm starting to think it's time, right, to look for the short side here, back down to those lows. Now, one thing I always tell you guys in the trade room is whenever we have a strong move and you want to sell short, it's always best to let them retest that high, right? Let them kind of get their job done. And then one of my favorite setups to short back inside these ranges when I have a bull market is to use what we call a two-try failure pattern. In other words, let the buyers try once, let them try twice. And one of my favorite techniques is to draw a trend line off that low, bring it up around that high. I can mark up that swing high right there, and that creates this just gold mine, right, of resistance up here that we can now use to sell short. So if we do get this market trying to go higher, if I get the buyers trying, right, buyers trying once, buyers trying twice, would love to have this thing short off the high. At the same time, too, if we saw the market run a little bit, right, a little bit more to the downside, I can always grab that one, right, and I can sell off of that as well. The only thing I wouldn't want to do is if the market was to go right back down into that trading range, right? I wouldn't want to I wouldn't want to do it like that, right? I wouldn't want to sell like that because that one's going to be a little bit too much in that range. So again, I'm at resistance. I'd like to be a seller, but there's a little too much bullish momentum. I want to let those buyers try once, let them try twice, see if I can grab that little channel off the high, right, and sell off that high, right? And again, there could be some variations of that. Be watching here for tomorrow. Now, as we go lower, if we do end up back inside of that trading range, ranges, of course, are big clues. If we do end up going sideways into that range, my job is pretty easy at that point. What I'll do is I'll mark up the underbelly of those lows, and I'll look to combine those levels of resistance with what I call a failure pattern, right? Which means I want to see us break above the high, get that moving average coming over, get those buyers to try to buy the pullback and simply sell into those stop losses, right? These are called failure patterns. And you know, guys, we use a lot of different variations of failure patterns in our trade room. In fact, I've talked about a couple of those here right now. You know, I go into a lot more detail of the many ways I use failures, like my 2-try failure. This would be a breakout failure. I cover all the smaller details of these setups, all the entry setups I'm going to talk about tonight. I'm going to go over the basics here tonight in this video, but if you want a much deeper dive into all my favorite entry setups, my entire 3-step strategy, lots of examples of how we use that strategy with our favorite futures markets. If you're serious about your trading career and you want to get a deeper dive into the strategy, definitely grab that free course button that popped up there. I cover all the entry setups in much more detail in that free trading course. You'll love it. So grab a little pop-up there that popped up there if you want to really get a deeper dive into the actual entry techniques we use in our trade room. Now, what if the market really rolls over, right? What if it really rolls? What if we make a strong run and this thing starts to collapse as we go lower here? Forget about this channel. If the market really takes a nosedive and runs lower, this is where, if I have enough momentum going lower, I can mark that low, I can mark that high, and I don't care where I am, right? I don't care if I'm inside the range. If I can see enough strength with what I call a 1, 2, 3 reversal pattern, I can easily sell off that high. Now, keep in mind, I'm not just going to blindly sell off that high. I'm going to use examples of my failure pattern, my pullbacks, my trap setups, my strength patterns. There's a lot of different ways I can look for entry triggers off the high of that channel. Again, I'm not going to go into all the details here on this video, but I would love to give you all the specifics you need to trade them on your own inside that free trading course linked up in the upper right-hand corner. So 1, 2, 3, strong jump, goes through that trading range, right? Mark up that low, mark up that high, and as always, the first test is the best test as we sell off that high. Where do you think my target is down here? Pendulum swing, right? Absolutely great spot for a target. We got that trading range from last Friday acting as a magnet. That'll be easy pickings there for a run back down again. And then you know what? If the market was to go all the way down again, could we then buy it back up again? Is that possible? It is possible. But at this point, though, once we take out these lows, again, imagine now we collapse all the way back down now. That range overhead is still going to be a magnet here. Once we take out kind of the objective, as I always say, once we complete the mission to the opposite side now what I can do is I can start looking for the bears to run out of gas, if you will, right? Let the bears try once, let them try twice, draw that trend line, find that trap. Another great example of how we can use bears getting short, right? Let them dig their own grave down there. I'm not going to buy off that low because of all of that momentum. The same reason why I'm not going to sell off this high, right? Because it's just too strong to the upside right now, right? But if I can get this move down, if they can take out these lows down here, right? Take out that pendulum swing, get the bears trying a few times, really rope in those bears. Where are their stop losses? Their stops are right above that high, right? There are two places to enter this trade. One is off the low, one is off the high. And these oftentimes those big moves down, they'll go 1 try, 2 try. You'll get your failure and then it will pop right back up, draw that trend line, find that channel, and you'll get a combination entry, a failure into pullback combination, right? Failure pattern, pullback pattern, combination. Again, I'm just simply drawing the screen to kind of show you what I'm looking for here tomorrow. I'll give you more details on those specific entry techniques in the video course linked up in the upper right-hand corner. All right, now, how do we trade the breakout? Well, all-time highs are right around the corner, so it's going to be a tough one here. Now, the next big round number overhead at 4,000 is a pretty decent milestone. You know, we go from 4,000 up to like 43.85, I think it is. 43.85, if I recall. It's kind of the next big milestone there. You know, these are all-time highs. There's not a lot of easy, reliable ways to predict how far this market goes, but 4,000 does appear to be a very easy number to latch onto. So if we do get a breakout, now there are 3 scenarios I'll be watching for if we get a breakout here tomorrow. The first one is a 1, 2, 3 breakout move. Now remember, on these 1, 2, 3 moves, it's not the strength of the first leg that matters. It's the strength of the next leg that matters, right? It's that 1, 2, 3, and that 3 needs to be go, right? It's got to be gas in it, right? It's got to be really jumping, right? Like this one, like that one, right? You want to see that 1, 2, go. When you get that 1, 2, go, you know there's a lot of momentum, and you're almost guaranteed to get a retest of that high. So if I can get that 1, 2, see ya, and really run, now I can mark that high, I can mark that low, and again, the first test is always the best test. I'm looking for seller failures, bullish pullbacks, right? Bull strength, bear traps, right? Off the low of that channel. Again, you'll learn all more details on those entry techniques in that video course I keep mentioning in the upper right-hand corner. That's the first one. Second one is going to be a strong move up, a shallow pullback to the moving average, a higher high in price, and a trap below that low. Now, this one is all about the first leg. The first leg is a blowout leg, right? It's a very strong leg pushing higher. We then see a shallow pullback. The shallow pullback is what really makes this trade work, because it creates this sense of urgency in the market. Everybody thinks they've missed the move. And then that higher high in price confirms this is not just a bullish move back into that range, right? So again, it's a strong move higher, a shallow pullback to give the market some FOMO. The higher high confirms the move, and of course that trap pattern as we go lower. I call these 2 traps. And then of course the last one, we have our all-time highs. If I can take out those all-time highs, my next move is a crown reversal. It's a bull market. We're at major tops on this. If the buyers, if they try once to keep it going and they fail, they go lower, they try twice to keep it going and they fail. Very similar, mark that low, mark that high, and hit that sucker, right? That's a great looking short, but again, please do not jump in too early on these reversals, right? Make sure we take out those highs, give the buyers the benefit of the doubt, let them try a couple times, and then we can short that sucker back down into that trading range waiting below. And keep in mind too, these oftentimes will collapse lower. You can then go out, find a new channel, right? Find that new channel and use that follow-up setup, right? So again, it's a crown reversal. It's a nested failure into that kind of 1, 2, 3 move. Again, shorten the tops of the high of that channel. I'm looking for bull traps, buyer failures, bear pullbacks, bear strength as we come off the top of that trading range. And again, if all this terminology is making your head spin, you can get a much deeper dive into all these setups in that free trading course. Make sure, don't forget, avoid the range, right? We don't want to trade inside the range unless we can get a real strong move through. Then I can find that channel and get short off that channel. buy low, sell high, respect momentum. And again, tomorrow morning, we're going to trade this stuff tomorrow in the trade room. So don't be afraid to come out and join us here as a brand new member. How about some NASDAQ? NASDAQ is similar to the S&P. NASDAQ, of course, is nowhere near its all-time highs. We've got a ways to go here before we get to the all-time highs on the NASDAQ. NASDAQ is really nowhere near where the S&P is right now, probably because of the pandemic hopefully coming to an end. It looked like it was going to happen last week, but now everybody seems to be nervous about this third or fourth wave right now. Hopefully everybody's getting their vaccines and staying healthy out there. Now, it's kind of like the tale of two ranges right now on the NASDAQ. You'll notice I've got this range below us, 12,800 and change, right? That really is kind of the big granddaddy of the ranges here, right? A lot of volume trading hands in this area here. So, as you can see, I've marked up the amount below the range. There's that low back there, right? I've marked up the amount below that range. I've got the amount above the range. You can see where we are right now, right? We call these pendulum swings. Remember that? Remember, ranges are balanced markets, right? So imagine there's a balance area right there, right? The amount we go below the range is the amount we go above the range. We're right there right now. So a major area of resistance, a lot like the S&P, right? S&P is bullish, obviously, going higher, right into those all-time highs, right into resistance. The NASDAQ is also pretty bullish going higher. Not that bullish, right? But it is overall bullish here, right? Going higher here. And at the same time, running into some overhead resistance. Now, of course, if you look just closer at today's trading session, today was basically just one big trading range, right? So you've got this, right? You've got your ultimate that range here, right? Goes down into a range, pops up, back into a range, pops up. We get that strong move higher. So I would assume that is the open loop that buyers are trying to close, right? Very similar to the S&P. Remember, go back to the S&P for a second here. The S&P had that big run up, retest the high, right? Big run up, retest the high. Now you're good to go for that short back down again. The NASDAQ, not so fast, right? NASDAQ, strong move up, retest the high. NASDAQ, strong run. Oh, we're not quite there yet. So what we ideally want to do is get that high taken out. If we can get that high taken out, then that, again, it kind of completes the mission for those buyers and gives a whole lot more, reliability to that, or high percentage to that short off the highs here. Again, I have kind of a tale of two ranges. I get a range below me acting as a magnet, range below me acting as a magnet. We're up at an area of resistance. Very, very difficult to want to be a buyer in this area right now with multiple ranges below us and overhead resistance. So we know we are. We know we're at overhead resistance. I've got my kind of measured legs going higher here as well. All right, now, very similar here to what we talked about on the S&P. Couple things you want to think about, right? First of all, I would expect these buyers to make a very good effort to retest those highs, right? Now, let's plan it out. If they do go higher, right? If they do go higher here with a 1, 2, 3 move, remember, it's not enough to see a strong break higher. They have to hold it and go. If I can get that 1, 2, 3 breakout, now I can mark up that high, I can mark up that low, and I can buy the first test off the low of that channel. And again, I'm not just blindly buying it. I'm looking for a seller failure pattern below the moving average, looking for a bullish pullback combination, looking for a strength move, a bear trap, looking for any of my 4 favorite entry setups, which you'll learn all about in the free trading course linked up in the upper right-hand corner there. I'm looking for one of those entry setups off the first pullback off that channel. Now, we've got some minor levels overhead here, but let's face it though, the buyers really want to get up, right, to those is that all-time highs there? No, that is not excuse me. They really want to get up to, right, those recent highs there, right, that 13 280, right? That is really kind of the big place where those buyers want to go up there. So we know where the buyers would like to go here, right? Again, 13,150 is a major area, but if I had to guess, though, I would guess these buyers, they can break free of this range. They want that 13,300. They want that 13,300. And, of course, with a big stimulus bill coming out this week, they may have the juice they need to get there. A second type of pattern as we go higher would be that two-try trap, right? Strong move up. Now, in this case, it's got to be a strong run, right? Very strong run. You'll know when you see it, right? You'll know when you see it. It's a very strong move. It'll feel like this one, right? Like it's never coming back. When it pulls back, watch that shallow pullback in that higher high. The strength confirms the breakout. The shallow pullback creates tension for the buyers. The higher high confirms the move. That now gives me the ability now to buy that trap low with confidence. And as I always remind you, extra points, extra bonus points, if you can combine that entry pattern off the low of that channel, right? My favorite ways to trade breakouts with those trap setups coming in off the low of a brand new channel. Those are two patterns as we go higher. You know, though, that as we go up, if this thing stalls out, right? If it goes up now, let me zoom in a bit closer here for us. Okay, keep your eyes on, just like the S&P, right? Strong move up. They close the loop, right? They complete their objective. Now the buyers try to buy once. They go lower. We draw that trend line. We draw that channel. We find that short off the high. We get a beautiful trap off that high, right? Keep your eyes on those setups here as we go. Remember, we're not just simply selling off the top. It's too bullish to sell off. I mean, you can, but it's just not a very reliable short, right? We can do better than that. If you want more consistency in your trading results, you got to really respect the momentum of the market. You know, I want to see a good setup, a really good setup. I'm trying to go against that momentum. And I got to get some sort of edge by locking in those buyers, right? Get those buyers trapped on the wrong side of the market and then hit them, right? Hit them with that failure or that trap setup off of those highs. That'd be a great, great look here going back down into that trading range. Also, too, right? Also, too, do not be surprised if we go up, take out those highs, and then this thing goes on a run back in the opposite direction. 1, 2, 3 move. What do? Mark up that low. In this case, I'll probably go out, mark up that big high, and look for that first short off the top of that trading range. Again, if we have enough momentum coming down, we have no problem getting at least a retest of that low. Right? It may not go on forever, but we can at least get that retest of that low. So a nice easy short, if we can get that again, that 1, 2, 3 momentum move. And then don't forget, right? Once we get to the other side of this pendulum swing down here, right? If we go all the way back down again, take out these lows, take out that pendulum swing, this is exactly where now we can start looking for those nested failures, right? Lots of bearish momentum here, but now we think about, right, bears try once, bears try twice, draw that trend line over. I've got all those bears have their stops sitting right above that high. Today's trading range acts as a magnet. I can buy off a trend line. I can buy into those stop losses for that run back up into that trading range. Just remember, we'll watch that, closely once we get there tomorrow, but just don't try to force that buy off the low. Remember, it's very bearish, right, at that time. And if we get one of these guys, right, where it kind of collapses back in and holds and goes like that, that's where you incorporate that new hidden channel and sell off the high, right, of that channel. So if it does end up running lower, bears, of course, come in and whack it running from there. Mark that low, mark that high. And again, we're selling off that high, right? It's a bullish failure pattern, right? Or it's a failure pattern for the bulls, right? A buyer failure. It's a strength move. It's a bear pullback combination. It's a bull trap, right? One of those core entry setups that we talk about in the free trading course linked up in the upper right-hand corner. Where do we think these bears would love to get to? Again, if I can get that short 1, 2 off the high, we go back into the range. We go back into the range. If things really get crazy, though, get that 12,609, right? We'll call it 12,600 just to be an easy kind of round number there. Again, don't forget, if we do end up kind of sinking back down into this trading range, right? If for some reason, for example, we go up, we retest those highs, and we come right back in and start trading sideways inside this range, that will confirm for us that we have the likelihood of a pendulum swing back in the opposite direction. But now what do? We find levels of resistance up overhead. We combine those levels of resistance with those failure setups, right? We don't try to pick the tops. We wait for buyers to get up, wait for them to buy that pullback, and simply sell right into those stop losses. That pattern, just like this one, right? Get above the range, wait for the buyers to buy the pullback, and hit them right where their stops are, right? Use those buyers' stop losses, which are basically just sell orders, right? They're market orders to sell. Use those stops as fuel if we do end up going sideways into that range tomorrow. And obviously, we'll cover more of the small details here tomorrow morning in the trade room. Can't cover everything on this video tonight, but we'll cover more obviously tomorrow morning at 8 o'clock in the trade room. NASDAQ looking pretty good. Got a bunch of key setups if we can keep going higher or if we go lower here. Keep your eyes on that range underneath us. How about some gold here? Wrapping things up here on the gold for tonight's video. Gold had rollover over the weekend. I apologize for not giving you guys a better heads up on that. We did roll over. It was kind of a surprise rollover. Gold is, out of all of the futures markets we trade in our trade room, gold is always the one that's always a little bit more difficult to anticipate when rollover happens. It was a relatively low volume session overall today, which makes sense because of rollover. We're now on the June 21 contract, right? The 0621 here on the yellow metal. What's the most important factor right now on the gold? There are two key components. One is that trading range, the range of death, right? We've been stuck inside that range here for what seems like the entire month of March. It was pretty much the last couple of weeks of price action trading has been back and forth, buying low, selling high, and using that range as a magnet. But it looks like that may be coming to an end here today with, of course, this big break down. You'll notice we see this move up above the highs. The market rolls over and runs off of that moving average, right? Jumps as it goes lower. Anytime we see this much strength in one direction, we expect to have, at the very least, a retest of that low. At the very most, we expect to get a measured move. And you see I kind of identified where I'm anticipating, or at least the size of that measured move, right? We go back, we measure that first big leg down, right? That first big leg down gives us kind of the template to use. We can see it's very symmetrical there. In fact, you'll notice it pretty much finished right on that measured move today. If we do get a pullback now, and I would love to get a pullback here at a level of resistance, that is, I've got a resistance trend line overhead. I have major areas, prior swing lows. I have a little tiny price action gap right there. I'm not sure if you can see that there. There are two back-to-back candlesticks with no overlap. Anytime we have, and you can see if I can zoom in on this real quickly here, if you look at that chart, right, there's those two candles right there. Now, that may not seem like a big deal, but most of the time when there's a gap on that chart like that with this much strength, it'll come right back, fill that gap, and come right back down again. We don't see that very often, right? Look closely. You'll see. We don't see many times where you get two red candles or two green candles and zero overlap, right? Even the following one right there, right? Overlapping candles. They almost always overlap a little bit. When you don't have an overlap, usually that means we coming back, right? We're coming back to that area here because that generally means a lot of traders were unable to get in on that move. So range is a magnet, right? Range is definitely a magnet. But we have a lot of bearishness in this market right now. I should also mention, too, there's a weekend gap on this chart. What is a weekend gap, by the way? Weekend gap is whenever there is a gap between Friday's close and Sunday night's open, right? Markets technically open up on Sunday evening. If you look closely here, there is a little teeny tiny gap. Well, it's not that small, right? It's off the Friday's close. It opens up a little bit lower. They did fill that gap, right? So please don't confuse this with an unfilled gap. But that weekend gap will be a magnet for the rest of the week. So I'll tell you, it is a very convincing story that we might end up back into that trading range. Range is a magnet, weekend gap, of course, but we're unfortunately right now, we're just simply too bearish right now to try to buy this market. We have a lot of momentum coming off that high as we roll back down. So I want to be a seller, right? I want to sell short at areas of resistance. I've got a couple key areas here up overhead. Again, we have a pretty good idea of kind of where we think this market wants to go, right? That measured move as we go. In situations like this, I start thinking about two types of pullbacks, right? Two types of pullbacks. One would be inside this battle zone. The other one would be up around this trend line coming down. Here's some things to consider here as we go. If I can get up into that first layer of resistance here, the bears will still have most of the momentum under their belt. In these situations where I have a lot of bearish momentum and we pop back above the moving average, what I can look for here is what I call a failure into pullback combination. Now, these are really, really common in the markets right now. And the way they work is we ultimately wait for price to get above the moving average, right? Kind of like that one back there where they go above it, they try to buy it, and it falls back down again. Same idea, right? Let the buyers get above the moving average, get them running into overhead resistance. Okay, we're not going to buy this, obviously. We're going to wait for as we go up again into resistance, wait for these buyers to come back and make them try, right? Let them try to buy that pullback. Once they buy that pullback, it's so much easier now because now we know exactly where their pain points are, right? Now we know where those buyers get stopped out, okay? We can now basically structure it to sell right into those stops, right? That's called a failure setup. Then as the market comes over now, okay, now we oftentimes will pull back. That first pullback is another great opportunity. These are very common combination setups. You can see, right? We go up, buyers try, they fail, we pull back, right? We go lower, they pull back and roll over. Same general idea, right? So we're keeping an eye on that, again, that buyer failure into bear pullback combination. Think about that measured move as that target. Another scenario you want to think about is if the market really pops, right? If it really pops up and goes higher here now, there are some variations of this setup, and I go over those variations in a lot more detail in that free trading course I mentioned. But the basic idea is this. With this market blowing through these areas of resistance now, with that range acting as a magnet, I have to start not worrying about the buyers, but giving them a little bit more credit, right? And more of the benefit of the doubt here. In these situations, I want to let the buyers try once, let them try twice. And again, there's a couple spots to sell this. I can draw that trend line down and sell that, or I can simply sell into stop losses. Now, a lot of times, we call these nested failures. These will oftentimes really surprise people, and you'll see this big dramatic move down, right? In other words, we jump up, we go through some of the more, some more obvious levels of resistance, we run into that trend line overhead. A lot of bullishness now in the markets. Buyers try once, buyers try twice. Do I get lucky and get a short off the trend line? Do I really get lucky? A trap above that high, right? Even better. Again, off a trend line, off a trap, selling the stop losses. It's called a nested failure pattern, right? Buyers try twice and run lower. We're selling short off resistance. We're selling into stop losses to pour gasoline on this market, running lower. Then from there, we oftentimes, because it catches so many people off guard, it runs down on strength. When it runs on strength, watch out now for that two-try trap pattern, right? Strong run down, shallow pullback, lower low in price, trap high. And as always, extra bonus points if you can get on the top of that bear channel. So those are some really great setups if we can get this market running higher here. If the market can go lower, right? Let's say we roll over here and we go kind of grinding lower here, either in a channel or a wedge of some sorts. Where is the next objective at the downside? If the market keeps on rolling lower, this measured move is not going to be the next big milestone. It will be that 1679, 1675, right? That's a major low there from the beginning of the month. If we do end up, again, if the market simply kind of rolls over and keeps on rolling like this, at this point now, very bearish. We now start marking up those prior highs. We start looking for hidden channels, and we look for that short off the top of those hidden channels. Now, again, we're not just simply selling short off the top, right? What I'm doing is I'm waiting for the market to go up. Buyers try and failure into pullback into strength. So again, I'm looking for really any of my bull traps, buyer failures, seller pullbacks, right? Seller strength setups off the high of that channel. You'll learn a lot more about those inside of that free trading course linked up in the upper right-hand corner. And then again, if we roll over here, that measured move will no longer be applicable as we go lower. Last but not least here, how do we buy this market, right? How do we buy this market? There are two ways to get long right now. One would be we wait for the move to come back and retest that low. Then we let the bears try twice, once and twice, and we use one of those nested failures, right, to buy into stop losses and go potentially back up right into that trading range. Remember, we don't want to try to pick a bottom on this too early. They have to retest those lows. Then we start looking for bears trying a couple times, and we start looking for those buy setups now going back up into that trading range. Another possible scenario would be we see a strong run up. We go right into resistance. We hold the pullback. And we go through those highs, mark up that high, mark up that low, and as always, I want the first test off the low of that channel. A 1, 2, 3 reversal into a hidden channel pullback. Another more advanced tactic would be if we see it really strong run up. A little more advanced, so you can handle it. Shallow pullback, higher high, trap low off that trend line. Okay, this one, of course, would be we go enough strength above the trend line, shallow pullback, right, creates FOMO, higher high in price, confirms the move. We got that trend line coming down. Bingo. Great time to use resistance as support. And, of course, we're going back up into that trading range. I'm sure I missed a few details here tonight, but not to worry. We'll do more of this tomorrow morning in our trade room. Right now, though, will those bears keep this party going back to those lows? Only time will tell here on this. Can the bears hold this breakout? Can the bulls on the Nasdaq, can they hold the breakout? Can the S&P retest those all-time highs? No matter what happens tomorrow, I would hope you're going to come out and join me tomorrow morning. We'll trade it together in our trade room. We get the plan ready. We know how to buy it. We know how to sell it. Now all we need is to get together in our trade room, and we can do it together. Guys, join me every morning, 8 o'clock Eastern Time in our trade room. I'll put all the information you guys need to get registered in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys to join our members classes, our free trading classes. I'll put all the details below this video on our trading blog at Sideways Markets, or I'll put a link in the description of the YouTube video. Don't be afraid to call the office. I'm always here to help answer questions and help you guys get registered for our daily trading sessions. Don't be afraid to use that live chat on the left, live chat on the right. And I hope by now you've subscribed to our YouTube channel, because we'll do this again tomorrow night, same time, same place. If we don't see you guys tomorrow morning at the opening bell, 8 o'clock Eastern Time in our members trade room, I'll come back and see you guys tomorrow night, same time, same place, as we get ready for Wednesday's trading session. But that's it for me tonight, guys. Hope you enjoyed the video. Hope you'll subscribe, post those questions, and hit that like button if you guys enjoyed the video tonight. But that's it for me. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.